Hello, and welcome back to IOSnap. In this video, we will go over how to conduct an impact analysis using the software. The impact analysis feature can be accessed from the Analysis and Impacts menu item or from the ribbon. Impact analyses can be conducted with any available accounts in the drop-down list, and the Impacts Analysis feature operates identically for national and regional accounts. Either impact analysis activation method requires the users to select from four analytical frameworks. The four analytical frameworks that users have to choose from break down as follows. Type 1 models quantify the direct and indirect impacts on the region from changes in final demand, while Type 2 models add income-induced impacts to the estimates. Impact estimates can be driven by changes in final demand specified by industry or by commodity. The nature of the impacts estimate will dictate whether industry or commodity final demand should be selected, and the selection will, in turn, result in a model designed to respond to these final demand changes or shocks. Please see the IOSnap documentation for more detailed information. Examples of industry-driven final demand impacts would include the expansion or reduction in the scale of operations of an existing production facility. One way to model the impacts of a change in activity levels in an industry is to specify the change in industry output as a change in final demand for the primary and secondary commodities produced by that industry. However, for scenarios where we know specifically which commodities will face increasing or declining demand, we would use commodity-driven impacts models. Examples here include the impacts of tourism expenditures on the region or changes in export demand for a specific commodity. After selecting the desired analysis type, IOSnap opens an impacts assessment data entry form. Let's choose the Type 2 commodity-driven impacts. The first data column in this form is for entering the final demand shocks that will drive the impacts assessment model, while the second column presents the existing regional final demand for the row commodity or industry, depending on whether the analysis is commodity or industry driven. Let's enter a change in final demand in Sector 11, the fabricated metal products sector, of 100 million. At the bottom of this screen, we can see two checkboxes, one to convert to producer prices and another to apply regional supply percentages. IOSnap's input-output accounts are denominated in producer prices. The prices paid by purchasers or purchaser prices are composed of producer prices plus margins, transportation, wholesale, and retail markups. If we know a change in final demands in purchaser prices, but have no information on how to split them into producer prices and margins, we can use IOSnap's data on average relationships among these variables to convert purchaser prices to producer prices for the impacts assessment. Final demands can be satisfied entirely by a region's own industries or partly by imports. When we know that the impact will be satisfied entirely by regional industries, we leave the Apply Regional Supply Percentages unchecked. An example here would be when we know that a regional industry has received an order for a specified level of product to be delivered to another region. However, when final demands increase generally and are expected to be satisfied by a mix of local production and imports, we use the regional supply percentages to moderate the impact on local producers. After entering the final demand shocks and determining what boxes to check, in this case none, we can click on Analyze to conduct the analysis. The results are displayed in a new window. The first results column reports the final demand impacts entered by the user or entered by the user and subsequently modified by the application of either regional supply percentages or a conversion from purchaser to producer prices. The next three columns report commodity output impacts, industry output impacts, and employment impacts, respectively. The differences between commodity and industry output impacts reflects the fact that commodities are produced by more than one industry, or at least that industries can produce more than one commodity. The final four columns report employment compensation, tax, gross operating surplus, and total value added impacts, respectively. Total value added impacts are equal to the sum of employment compensation, tax, and gross operating surplus impacts. For more information on interpreting results or understanding different terms, you can check out our documentation at www.io-snap.com or the web book of regional science. We hope you continue to enjoy IOSNAP and join us next time for another video.